I'm very worried about all things paper going. I think we're in an overvalued US dollar, and we're about to enter a whole new gold bull run that's going to go ballistic. And get into the market now. Why gold? Why now? You need to get in now.
Hello and welcome to the Keanu LaRue podcast. If you, like myself, are interested in entrepreneurship, business, and building generational financial freedom, then this is the show for you. Join me as I interview some giants in the field who have built financial success for themselves as well as scaled multiple businesses. If you're humble enough, you can learn from anyone. Enjoy today's episode. Alright, welcome to the video. I'm joined with a very special guest here, Dr. Craig Voortman, and we're going to get straight into the interview today. I know all of you guys are itching. I've been posting this and announcing it for a little while, so a lot of you guys are interested in today's interview. But just to get started, Dr. Craig, just introduce yourself, tell us about who you are, where you come from, and what you do, your qualifications, whatever you want to tell the people.
Okay, so my name's Craig Voortman. I'm an author, I'm a logistics consultant, I've studied personal wealth a lot more recently. I've got an MBA from Wales University, I've got another master's degree cum laude from the University of Johannesburg, I've got a PhD from University of Johannesburg. I've studied like everything from business management to economics to logistics to psychology to industrial psychology. I've taught about 40 subjects at the University of Johannesburg. Just think of that, 40 subjects, and from production, primarily in the business fields. I run my own business, and I distributed Voortman cookies in Southern Africa. So Voortman cookies is one of the world's top brands of biscuits. Producing approximately 35 million cookies a day. Just think of that, 35 million cookies a day, and distributed in Southern Africa. And then I've run my own consulting company, so I've done consulting to more than 50 companies, many of them blue chip companies around the world, on about 4 continents in approximately 30 to 40 countries. I've traveled to 80 different production plants around the world, so I've seen how ice cream's made, I've seen how cars are made, I've seen how furniture is made, I've seen how beds are made, I've seen how virtually you name it, I've seen how it's made, which is really interesting. And that's a little bit on me. So how did I get into writing the book? Well, I was working overseas in a city called Yanbu, a beautiful coastal city on the Red Sea. And I was traveling on my way to a shopping center in Yanbu, and this shopping center, in the back of my car, I had my 2 daughters, Amy and Tamay, in the back of the car, and we were talking on the way as I was driving to the shopping center about different businesses, and why was this one business, the Al Bake, doing so much better than the Herfies. Herfies is a very good business, almost like a Steers in South Africa, a hamburger place. And then the Al Bake was almost like a KFC, but a different twist to it. And we were talking about these different businesses. Why was the one doing so much better, and their location factors, all sorts of things. At the end of it, my daughter Amy said to me, "Dad, we know you know how to make money, but you've never taught us how to make money." So a bit of a slap in the face from the 16-year-old at the time. She's now 21. And I said, "Well, what do you want me to do, Ames?" And I carried on driving on the way to this shopping center. And Amy said, "We want you to write a book like your first book that you wrote." So my first book I wrote was a book called Global Logistics Management. It sold for 20 years. It was a very popular book, basically a simple book, teaching you what is supply chains and logistics. Very simple, easy to understand, not complex. So what I've tried to do with this book is write you a book that is simple, easy to understand on how to make, manage, and multiply your money. I'm only trying to do those 3 things: how to make, how to manage, and how to multiply your money, which is a bit easier said than done, I just must warn you, but it is possible. So it was an interesting journey. So I decided to write a very simple book that my daughter Amy would be able to understand. Well, both of my daughters, Amy and Tamar, even my 13-year-old son will be able to understand. Even you, the interview,
Even me.
the interview will be able to understand it because it's written in very simple language, easy
Perfect for
to
me.
understand. Yeah.
Amazing. Craig, thank you so much. I have read a little bit of your book and I've really enjoyed it so far. So definitely recommend. And we're going to be referring to your book a little bit in this interview. But I want to start off the interview by asking, the reason I'm starting this channel and doing interviews with people like you is because I myself, as an aspiring entrepreneur, I want to build financial freedom and I want to learn from some giants in the field like yourself who have walked a long journey building businesses, investing, knowing the stock markets, knowing what to invest in, learning from your mistakes and other people's mistakes. As a novice investor, as it were, I want you to teach us and I want you to teach a lot of people. I know a lot of people that are young and building financial freedom for themselves as young aspiring entrepreneurs, both men and women, are in the same boat as I am. So the first question that I have for you today is, we are going to speak a little bit about investing and the stock market today, which I'm very excited about. But for anyone that isn't clued up, someone who is completely illiterate on what investing is, what exactly does it mean to invest your money? And why should people invest their money as a means to build their wealth?
Okay, so investing your money, money is an asset. Okay, so you don't want your money sitting idle. You ideally want your money growing and multiplying. So the first thing with money is you want to always try and clear up your debt. Okay, so you should try and not live with excessive amounts of debt. I've always tried to only have one debt that I'm managing at a time. This might sound weird to you, but as I was growing wealth and growing money, I always only had one debt. My wife and I would pay off one car. When the car was paid off, then we would buy the next car and we paid off that car. Once that was paid, we kept those cars. This nonsense that you have to sell a car every 3 years. You only sell bum cars. You don't sell good cars. Okay, buy a Toyota, drive it for as long as you can. My mother, who's sneaky wealthy, she's driven her last Toyota Yaris. And bear in mind, she drives a Yaris and she's sneaky wealthy. She's driven it for 20 years. The previous one before that, her Corolla, she drove it for 20 years. I mean, she can afford Mercedeses, okay? She can afford a whole bunch of Mercedeses, but she drives a Yaris. Okay, so try and consolidate your debt, keep your debt manageable, live within your means. Of the $800 millionaires that I interviewed, by the way, most of them live within their means. They're quite frugal. They're not stingy, but they're quite frugal with their money. So when it comes to investing, your question again was?
Yeah, what exactly is investing and why is it a good means to build wealth?
Okay, so investing is taking something and turning it around so that ideally you can start multiplying your money. You know, one of the smart people, the wealthy people that I interviewed, what you find is most of them multiply their money. So now how do you multiply your money? You multiply your money through your own business. Ideally, you want to multiply it through your own business. Many of the wealthy people, not all of them, there were many salaried people who, by the way, that I interviewed who were dollar millionaires. But many of them ran their own businesses. So multiply it through your own businesses. Multiply it through the stock market. But you got to know what you're doing if you're going to invest in the stock market.
That's why you're here.
Yeah. Multiply it through precious metals investment. Currently, I believe gold and silver are critical investments right now. I believe we're about to go through one of the biggest gold and silver bull runs in the modern history of gold and silver. And I state that in my book. I'm putting it in paper, in writing. You only do those things when you really believe in something, because people hold you to it. So gold and silver, number 3. Property. My family, my mom, my sister, my brothers, we've always been big believers in property. This little studio that we're filming this in lets out all the time. It's like a small little mini gold mine. Okay. Properties around the world generate income. It's called passive income. Passive income is making money while you sleep.
Yep.
So remember, don't ever buy anything that eats your money while you sleep. Think that through. If you're doing it for pleasure and you understand that, like you go and buy yourself a boat, but you love boating and you know it's eating your money while you sleep, that's fine. At least you know it's eating your money while you sleep. That's your choice. Okay? But most people don't buy assets that eat money while they sleep. So, for example, the holiday house, if it's not letting, a little extra holiday house along the coast, don't even have it if it's chowing and eating away at your money, because you're stupid. Then you must get that asset to multiply and churn money into your coffers. Then it is asset rather than a liability.
Very, very good.
Okay.
Thank you so much. Brilliant answer. Very, very exhaustive. I love it. So you spoke about investing in gold and silver, and I read that chapter about gold and silver and how you emphasize now specifically is the time if you don't have to buy gold and silver. So you speak about the reasons in your book, what makes the factors that make gold so valuable. What are some reasons that make gold extremely valuable today?
Okay, so just simple reasons about gold. Firstly, mine gold. In other words, gold that's already out of the gold. There's a lot of gold in the ground around the world, but that doesn't really help you now because it's got to be mined. It's got to be a coin, or it's got to be on your finger, or it's got to be jewelry around your neck, or a gold bar, etc., in a vault or in your safe or wherever you store it. That's gold above the ground. So it's been processed. It's called a beneficiation process, just by the way, if you want to know the fancy name of it. It's basically taking gold out of the ore and processing it, melting it eventually, and turning it into the coin or the bar or the jewelry item. So that's one of the things about gold. There's only 4 Olympic-sized swimming pools of gold total in the whole world. Just think that through. It's a finite amount. 4 Olympic-sized swimming pools in the world. And I want to have a little piece of that water. I want to have a piece of that pool. Okay.
Crazy. So it doesn't sound, especially its scarcity that makes it valuable. I mean, the Olympics, you know, because you're watching the Olympics at the moment. We just watched the Olympics now. Can you explain quickly the difference for myself and for us watching, what the difference is between investing in physical gold and versus gold-related securities?
Okay, so gold-related securities, or ETFs, electronically traded funds, etc. This is physical gold. So I own gold coins and gold bars. This is physical gold on my. If you've got, say, good 24 karat gold, better quality gold, 24 karat, 14 not so good quality, 24 or 22 karat better quality. If you've got that type of gold, it's, to me at the moment, better than what I call paper gold. So paper gold is, you can go online now and you can, say, invest 5,000 Rand in a gold ETF. That gold ETF will invest in gold companies. I'm not saying all of this is bad, by the way. I'm just saying it will be invested in paper gold. Sometimes even it'll have a portion of gold in that. They'll buy some bars, but it'll primarily be in gold companies like Barrick Gold, Anglo Gold, Newport, or all of these different gold companies. Some gold royalty companies. What's a gold royalty company? To run a gold mine's expensive. So the gold royalty companies basically fund the gold mines. So I've got stocks in gold royalty companies, but I'm a big believer in physical gold right now. I want to keep my hands on physical gold. Why?
That's the question we want to know.
Okay, the question we want to know is because supply and demand factors. The whole world at the moment's in this crazy bubble. Everything paper has gone just ballistic. Okay. As I told your father, and I've told you as well, I basically pulled most of my money out of US dollars. It's not that I'm anti-US dollars, just in case the Americans watching here, or the Federal Reserve for that matter. I'm not anti the US dollar, but the US has overprinted their dollar recently. In recent times, they printed 2 trillion extra dollars. Just to give you an understanding, that's 2 million extra dollars. How they're backing it up? They're backing it up with debt. I mean, is that a good thing to back up your dollar with? Debt? When I was a kid, if you had the South African rand or your US dollar or probably your Canadian dollars, etc., it said it was basically backed up by gold. That's what we call the gold standard. Years ago, our currencies were backed up by gold. Before your time, by the way.
Yep.
Before your time. You weren't even born then. Okay, I was born. Okay, when I grew up in the 60s, I knew, I looked at the Kruger rands, which is South African currency, by the way. And it said there, the bearer of this can go to the Reserve Bank. You could actually get some gold from the Reserve Bank.
Some photos over here.
Okay, so you could actually get the gold, but obviously you needed to take enough rands to get a chunk of gold. At that stage, gold was $35 an ounce in the 1970s, so you'd have to give the equivalent of $35. Can you believe it? Back then the rand was stronger than the dollar.
Just
You you got more dollars for the rand. Now it's gone the other way around. Okay, but you basically, all currencies around the world, the US franc, the euro didn't exist at that time, but all those currencies were backed up by gold. In other words, let's put it in simple language. Here is a US dollar. It had the equivalent of gold backing it. Okay. But then in the 1970s, something happened. The US went off the gold standard. Why? Because the US was in a war in Vietnam. They were running out of money. Their currency wasn't able to be matched by the gold. They were running out of money. They basically needed to start printing a bit of money, to be honest with you. And then they went off the gold standard. They actually made the US dollar the standard in the world. But the US hasn't been I want to use good words over here. I don't think they've been as responsible as what they should have been with the US dollar. Because in recent times, they've been overprinting their dollars. Okay, and what's happened now is it's created a problem for all things paper. I think in somewhere in the future, we're going to have a crisis on all things paper. All things paper. That means a crisis on US dollars. It's already coming, by the way. A crisis on US stocks. Why US stocks? Because they've been elevated and pumped up with US dollars. Even US bonds are going to come under threat. There's a US bond market's huge. Just to give you an insight, you don't even know this. China's been selling off US bonds.
Sure.
In big chunks. They've been selling off US bonds. So much so that US delegations went to China to find out what's going on and blah, blah, blah. You know, normally the US doesn't bother going to China because they're the superpower. But when they started seeing all the selling off of bonds. So I'm very worried about all things paper going. I think we're in an overvalued US dollar, overvalued US stock market. I'm not saying all Tesla's bad and Apple's bad. These are great companies. Apple, Amazon, these are awesome companies. But I think the stock market in general is just overvalued, which creates a lot of risk. Okay. So I'm now increasingly moving to things physical. To buying properties, to owning physical gold and silver.
So no Bitcoin.
No Bitcoin. So, by the way,
sorry for my crypto people there.
Yeah, for the crypto people out there, I'm not saying that crypto doesn't have a value. Just understand what I'm saying, because in trade, crypto could have a very good value, but I still believe crypto almost needs to be even backed by gold, which is a weird thought. But so blockchains, by the way, I understand. I'm one of the few people who actually understands how a blockchain works. Yeah. Why? Because I studied it. I've got a file like this on blockchains, literally. Okay, sure. Blockchains is a powerful, powerful technology. I personally believe that Bitcoin's kind of stolen a lot of the potential shine of blockchain, even because blockchains are actually a chain that could be used as proof. So let's say you bought, there's a fancy painting on the wall over here, okay? and this painting costs $100,000. You could have a blockchain on that painting with the lawyer encrypting something on, with the transport company shipping it globally, etc. That, by the way, is called a blockchain. So Bitcoin is a form of a blockchain. In a financial crisis, though, if you gave me a bag of Bitcoins or a bag of American eagles or American buffaloes, I'll take the physical bag of coins. Anyway, if somebody's got a bag of Bitcoins, I just say to them, show me your Bitcoin. Show it to me. I can show you. Yeah, well, you can actually, I can feel the gold on my finger. Show me your Bitcoin. I'm not saying people haven't made money out of Bitcoin. But I wouldn't encourage people right now to invest in things that you cannot physically see and touch. And I'm a huge believer in gold right now. I've never been bullish about gold. Bullish is an economic term about kind of the bull going forward, bullish. I've never really been that bullish about gold. I didn't own gold until the last 5 years, to be honest with you. I owned zero gold. I had properties, I invested in stocks, and that was all I invested in. Properties and stocks. That was me back then.
I know that we'll get to that personal stories now, but I know that your mom has quite a bit of a story when it comes to gold and her returns on gold. But in what you answered now, you spoke a lot about currency being backed by gold, and I know you in your book, in the chapter on gold and silver, you write about there are no currencies in the world today that are backed by gold. And what are the implications of back before pre-70s when the currencies in the world were backed by gold compared to now? Is it because of, if I'm understanding correctly, the fact that you could have an equivalent to basically you have a certain paper value and you can exchange that for gold? Now you can just print paper left, right and center and there's no cap on that.
Well, you've understood it perfectly well, so you don't actually need to do anything with me on this one. So I'll just elaborate on what you said, because by the way, you were spot on. So in the old days, currencies basically had to be backed up by, or let's put it in simple layman's terms, your paper notes. Okay, because there was silver by the way. The US had silver and gold as their primary things back in the 1800s. So a lot of trading was just in silver, pure silver by the way. So any silver coins, by the way, from the 1960s and before that, they're pretty much pure silver, by the way. Those after that are less pure, just out of interest. Okay, so there was a lot of trading back then as America was growing and the Wild West was won and all that. There was trading in silver. Okay, and silver, actual physical silver. This is where we get all these words, dimes and nickels. Well, the nickel's made from nickel.
Yeah, of course.
And but the problem was that that gold had to be backed, had to back the notes. So as much dollars as what you were printing, you had to have the equivalent value underpinning it in gold.
Yeah.
Okay. So after the Second World
War,
War,
Olympic pools of gold,
yes,
the equivalent should be, that's how much paper money should be in the world.
Yeah, so you had to have paper money equivalent to the 4 Olympic pools of gold.
Hope you guys are taking some gold nuggets from this, excuse the pun. But the next one I want to ask you is about gold rushes. For those who do not know what a gold rush is, I want you to explain to us what exactly is a gold rushes, what can we learn from the historical gold rushes, and how can that inform us on how to predict or make a guess of how gold will perform over the next decade or so.
Okay, so there have been a number of gold rushes in the history of gold. So gold, by the way, there's been found pieces of gold in prehistoric caves. During the time of the Egyptian pharaohs, gold was going crazy during that time. Why? You could call it a gold rush. Why? Because all the pharaohs wanted gold. Your capstones right on the top of those pyramids in Egypt, they they had gold right at the top, by the way, and you could see it. It used to shine in the sun. And these were the fancy pharaohs, so there was a gold rush happening there. In the time of Solomon, or in Arabic, Suleiman is his name, Solomon, there was a time of another gold rush. And Solomon owned the lion's share of gold in his time. Gold was going crazy in price, by the way, at that time. Solomon owned gold mines in Spain, Rio Tinto, in the rivers over there. He got gold from Arabia, etc. Then tracing it now more towards the modern era, we've seen gold rushes in the 1800s, where people were the Witwatersrand, which is the area where Johannesburg is actually was built out of a gold rush. People found gold on this rand, which is like a mountain range in layman's language, and people all came here, and the mining houses came in, and they were mining gold over there. Still, they mine it today. Gold's so valuable now, they even take the old mine heaps and recycle them to get more gold out, because they've got better processing now. So how's that for weird? Okay, and then the 49ers, for the Americans watching over here, the San Francisco 49ers, which is a team in the US. Okay, they got their name, the 49ers, because of the gold rush in San Francisco of 1949, 1950s. There were gold rushes in New South Wales, in the Australians, and that's where they spoke about gold nuggets, and there were a lot of Aussie towns popping up because they found gold over there. So we've seen these gold rushes around the world. A gold rush, just a time where people are rushing, especially to go and mine gold, etc. But we're coming to a new gold rushes now in our modern era. What's our gold rushes in our modern era? So after the 1944s, gold was basically flat at around about $31 to $35 an ounce, pretty flat. Then in the 1970s, America went off the gold standard. The gold standard, their dollar was backed by gold. And they had a war, the Vietnam War. They couldn't basically fund the war. They needed more money, so they were in a crisis. They had to go off the gold standard. So now their dollar was no longer backed by gold. Okay, my mother bought a whole bunch of Krugerrands, a gold coin in South Africa, a round gold coin like this, very popular. I can't remember the number that have been made. I think 17 million have been minted in the history. I speak under correction. It's in my book somewhere. But my mother bought all of these Krugerrands at $31 to $35 an ounce. Okay, and she bought a whole bunch of them. Well, in the 1970s, gold in one decade went ballistic. It started going crazy. My mother sold by around about 1980 for $800 an ounce. Just imagine, from $31 to $35 an ounce to $800 an ounce. Okay. Now, when I started doing research on this book, I got this feeling gold's about to go into... bear in mind, in the 2020, 2017, 2018, even before COVID, I thought gold was about to go crazy. Okay, I really thought gold was about to go crazy. My gut instinct, I got this from the genes of my mother, obviously. Something in my gut instinct, in my genes, in my investment genes maybe, told me gold's about to go ballistic. Gold's about to go through a new crisis. I remember in 2017 doing training to a bunch of executives for a very good company I worked for at the time, Parsons. And it was in project management. Okay, so I was training all these execs in project management, and then they found out I'd started writing a book. This was early stages of writing, 2017. They asked me, what would you invest right now? And I said, I would be buying gold right now. Back then it was at $1,450 an ounce. I remember that clearly. And I told all these guys to buy. And they said to me, no, you crazy, nobody buys gold. Warren Buffett says it sits on your mantelpiece and gathers dust. It's an unproductive asset. Of course I understand what Warren Buffett's saying, because Warren Buffett is not an investor like you and me. He buys whole companies. He buys whole companies. We don't buy whole companies. He buys whole companies. Okay? I mean, he can own big, powerful companies in the world. Berkshire Hathaway is that powerful. Okay, you and I, we're different. Okay, But Warren Buffett basically says own assets that are productive. Own a wine farm that's productive. Own a fruit farm that produces fruit. Own a business that produces fruit. Own an Airbnb that you can let out, or a house. Own a fleet of vehicles that can make you money for it. All of those are what we call productive assets. And gold is regarded by him as an unproductive asset. Why? Well, because gold's been sleepy from about 1980 to around about 2008. Gold was chilling and taking it easy, and the gold price was going nowhere. Gold dropped to about $250 an ounce. And some wealthy people still kept their gold because it was a defensive asset. So my winning soccer team, Liverpool, unlike your soccer team that starts with the C.
You can cause fights in the comments. Comment down below which team you support.
Okay, so the Liverpool supporters like me, I support a winning team. So when we play against, let's say Liverpool's playing against Manchester City, a real game on the go over here. Well, the defensive line, the defensive ability of Liverpool's critical in a game like that. That's the defensive ability of the team. But the offensive, the attacking ability of the strikers, Mo Salah scoring a goal, etc., that's another dimension to the team. Gold has got a defensive ability. It protects your wealth. Why? Gold price doesn't go up and down. Bitcoin sometimes goes, wee, wee, wee. One of my friends invested in Bitcoin. I remember he was a director sitting next to me. Two of us shared an office, two directors. And I always used to watch his Bitcoin going, wee, 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 up and down. My gold thing was just doing this all the time, okay? Going up over time, but slowly. He's going up and down. And anyway, so gold has historically had a defensive capability. It protects wealth. The wealthy people have gold. Why? Gold and silver, pure gold, physical gold and silver, because it protects their wealth. But gold is about to shift into a new season. Gold's about to become a player on the game. Gold's up until now been a defensive asset. Gold is about to become a defensive and an offensive attacking asset. And we're about to enter a whole new gold bull run that's going to go ballistic. We're even going to see incremental shifts in gold. Let's explain that in layman's term. The stock market, sometimes Apple goes up 3 or 4%. The stock of Apple goes up 3 or 4%, and people are shocked. Oh, did you see Apple or Tesla went up 3 or 4%? Okay, but gold's going to start doing the same soon. And then when gold starts doing the same, gold's not going to go up by $5 an ounce in that day. It's going to go up $40 an ounce, or maybe $120 in a day. How can gold do this? Well, it's going to be in a bull run. Gold's going to be starting to shift. And the more the crises in the world, and they are naturally going to come, I don't know what they'll be, but there will be. It could be earthquakes, could be wars, could be social political, could be economic, could be a new recession, God forbid a depression. If a depression comes in, please don't commit suicide. Whatever, if you're a listener, don't commit suicide. The sun will eventually shine in the morning. It might take some time, the sun will shine. Don't commit suicide, any readers of you. If God's able to look after the fish in the sea every single day, and the birds and the birds in the trees every single day, they don't worry where the next meal comes from. If you ask him, he will provide you with food and everything you need. Sorry, there's a bit of a spiritual angle to it. You read, there's a spiritual angle in this book, because I learned a lot from Solomon. He was the wealthiest guy ever. Okay, wealthier than Warren Buffett. Think that. Okay.
And wisdom as well.
Yeah.
All right, fantastic. So what are, and thank you for the extra free nuggets there. What are some economic factors that could influence the price of gold that we as amateur investors could look out for and watch as, basically can influence the price of gold over time?
Okay, so because of your listeners, I'm not going to give them the more fancy economic answers to my question, which is what we call inverted yield curves and all sorts of things that I'm watching, the economists over here, the people studying economics, an inverted yield term, basically in layman's terms, says that you don't get good value for money out of your bonds. Investing in bonds is almost not worth it in the long term, etc. So all of these things are starting to come into play in the global market. There's been a big drop-off in the share market recently in the US economy, people selling off. Warren Buffett recently sold, 500 billion or something Apple shares? I think that's quite worrying. Not that Apple's not a good company. Please note, everything I own is basically Apple. I'm an Apple guy. iPod, iPhone, everything. iPod, one of the best things that I ever owned, by the way. Still own it. Still listen to my music on the iPod. It's a little black thing like this, by the way, and it's got like all my albums, all my CDs.
Too young for that.
Yeah, you wouldn't even know what that is. Okay, awesome little thing. So basically, what to look out for in the world. How would you know we're about to go into something? Wars. We've got wars in the Middle East at the moment. I'm not wishing ill on this, I'm not wishing ill on any nation. Israel, Iran, the Palestinians, anyone, America, any nation. I'm not wishing ill. I'm just talking factually over here. But turmoil in the world pushes typically up the gold price. Economic turmoil, if the world goes into a recession or depression, and we could go into it. We've been living in a bubble economy for a long time. You guys don't even understand, as younger people, what war's really about. And my mother grew up in a time of food stamps, where they were given stamps and they could only buy certain amounts of food. Can you believe it? So this psyche is imprinted in my mom as a kid. That's why my mom's so frugal with money, because they grew up in the war. She's passed that frugality on through my DNA as well, by the way. That's why I don't believe in waste. You'll find there's no waste of food, etc. So the world is going to go into difficult times, and we could even have some black swan events. Black swan events, these are, you've got this beautiful lily white pond with all the nice white swans chilling and soaking in the sun rays, taking it easy, and then this black swan comes in and ruffles the feathers of the beautiful lily white pond, the global pond, okay? And black swan events could be hurricanes, could be earthquakes, could be, I'm not wishing this on the world, but these are factual things. Could be economic turmoil, could be socio-political turmoil, could be nuclear, hopefully no nuclear wars or anything crazy like that. All of these things can push up the gold price, the stock market crashing, people moving away from the US dollar, people moving away from US stocks, people moving away from US bonds or concerns about that. Personally, my honest opinion is China and India are about to become the new superpowers in the world. I wrote a book on China. I kept interviewing all these people, hundreds of executives in China and abroad, outside of China, and I kept asking them about China. Where do you see China going? And I mean, I know China's going to become a superpower within this century, a crazy powerful superpower. Okay, but all these people kept pointing me to India. India, have you heard about India? All these CEOs and execs, what about India? Do you know India? So India's going to, I personally think, I'm not God, but I think India might become a superpower for 300 to 400 years.
Sure.
Think that through.
It's a long time.
Okay, it's a long
After
time.
all of us.
I don't know what they're going to do to South Africa if they become that in the cricket, because I don't know how we'll cope with maybe India will have their own World Cup just within India, playing their own provinces. But the world is undergoing big changes. I don't see the US economy just going completely down. I think the US economy is going to go through some big challenges soon as people move away from things paper. Okay? Paper dollars, paper stocks, paper bonds. And it'll only be temporary because bear in mind, I'm eventually going to be selling my gold and I'm going to move back into the stock market. But I'm going to wait for the stock market to completely bottom out.
Interesting.
I'm going to wait until people are exiting the stock market, nobody's buying. And then when it bottoms, I'm going to be going back into the stock market. I'm going to even buy properties when things, but I'm going to hold on to my gold in the interim. Probably, God willing, for 7 to 10 years, I'll be holding on to my gold. Then I'm going to be selling the gold. Why? The gold bull run will be over by then. I'm not saying gold will suddenly drop again, but it'll have reached its peak for a while. I personally believe we must own gold throughout our time as we grow our wealth, at least 10%.
It's very interesting. So if you can say to our listeners in 1 or 2 sentences max, why gold, why now?
Okay, so we're going a quick lift up into this 15-story building. So we're in the lift. Why gold, why now? Because gold is currently chronically undervalued. Gold price has been manipulated. If you want to go and read on it, what has JP Morgan done on manipulating the gold price? There's lots on the internet. They won't even sue me because they know it's true. It's all on the media. You can Google them. I'm not anti-JP Morgan, don't get me wrong, but the gold price has been manipulated big time. Gold is chronically undervalued. You think gold's expensive now? Wait 7 years' time. Gold's just warming up. Gold's just getting going. Gold's just doing its early morning Pilates at the moment. It hasn't even taken off. Silver is a chronically undervalued asset. I bought silver at $15 an ounce. Silver's only $27 now an ounce. It's double in value from when I bought it. But I'm going to be buying more silver now. Silver's chronically undervalued. When gold takes off, silver follows. Silver hasn't even started following gold yet.
Sure.
But I'm talking physical silver. Buying a half a kilogram, 250 grams, even 100 grams of silver. You can afford silver, by the way. Even you can afford silver. Silver's a good thing. I'm not insulting you, but you're a young guy at the beginning of your wealth growth. Okay.
That's fine.
So silver's, and these things are seriously undervalued at the moment. They're going to go crazy. So sorry, now I'm entering the floors number 40 to 50 in the 50-story building. I need to wrap it up. Okay, but I need to explain this to you. Why buy it now? Because eventually demand and supply factors are going to kick in. And when the reserve banks of the world, who are going to back up their currency with gold, none of them are backing up their currencies with gold at the moment. When they start buying then, the demand on gold will outstrip the supply. And then you, the little guy wanting a gold coin, won't even be able to get. Why? The sovereign wealth funds of big nations, Saudi, the UAE, Hungary, all these places, all these sovereign wealth funds and reserve banks are going to be buying up the lion's share of gold. And when they're putting an order for 50 tons, your little 1 ounce of gold, they'll get to you, but somewhere down the line. And by the time you're buying it down the line, you're going to be paying more, or you'll pay a premium for it. Okay, so I'm saying get into the market now. Why gold? Why now? You need to get in now. You need to start buying now before it goes ballistic, because it's coming. I'm not the first person saying this. Go and watch. Yeah, you've got a few ignorant guys saying gold's going to go down, gold's going to collapse. I even watched those videos. They're interesting. I know they're not correct because gold's doing exactly what I'm predicting it to do. Okay? I think the prediction line's going to shoot up. Okay? I think gold's about to go ballistic. Okay? But even if gold just stays fairly static, it's grown by 20%, almost 39% since last year.
Sure.
Okay? Because I've got a diagram in my book. I had to have it 100% accurate because it's in the book. Gold was at $1,800 an ounce in January 2023.
Sure.
It's at $2,463 an ounce now. What's the date? The
14th
of August.
Yeah.
Okay, so gold's gone up approximately 39% in that time. So gold has I think by the end of this year, we'll have moved up 20% last year and 20% this year. Any investment, by the way, that does 20% of a year is a phenomenal investment. But I think gold's going to do 20%, 20%, 20%, 20%, 20% for the next 7 to 8 to maybe a decade even.
Sure.
So if you want to have the 20%, and what's the risk with gold? As long as you store it safely, I don't recommend under your pillow or in the garden. Okay, as long as you know where it is in the garden at least. Okay, but store it safely. There are good, safe places, preferably out of the banking system. Why? If the bank goes bankrupt, and banks in a depression or a recession can go bankrupt. The Greek bank went bankrupt, etc. Do you know that all the assets of that bank are then liquidated by the bank, including your gold stored in the bank?
Sure.
Sometimes you don't get the gold back. You just lose it.
Sure.
So I say I don't store within the banking system in the world. No way.
Sure.
Okay. And I've diversified my gold. It's stored all around the world, by the way, in tax-free zones around. Legally, there's nothing illegal. I don't do anything illegal anyway. So it's all stored legally around the world and safely stored. Okay. I mean, these nations, war could happen in their world. There's risk. You know, it's risk, but at least I've diversified the risk. That's not all under one umbrella in one little basket, etc.
For those, especially like myself, that are starting out and building an investment portfolio, how much percentage or how much should you allocate, especially just starting out, to gold? Would you say for a young guy, young woman that wants to invest in gold?
Okay, so before I get into gold, you're a young investor, potentially a young entrepreneur, etc. Firstly, as a young investor, a young entrepreneur, I would say start a business that grabs you. Do something that you must get up in the morning and feel like going to work. Do you know that for big chunks of my career, I've loved going to work. I've loved it. Writing this book was love. As a matter of fact, if I could, I'd give you this book. But I can't, unfortunately. Why? It costs me money to print it. Okay, it costs money to print it and distribute. That's why I can't give away my books. Okay? But for big chunks of my career, I've done something that I really enjoy. In this book, I talk about following your passion. You must do a career or a job or an activity that grabs you. Don't hate going to work. Okay, if you currently hate your job, yes, you can fire the boss, but don't fire the boss instantly. First, set up your business plan of where you want to go. Stay earning your money. Set up your sideline business. I spoke to a lady selling art for a company, but the business isn't marketing this company, etc. I said, why don't you start your own website? Get it going under your son's name. I'm not saying being unethical or illegal, yeah? But get it up running, get the website going, because that person's going to go bankrupt. They're not marketing themselves, etc. And then you sit without a job. Get your own thing. She's passionate about art. She can get her own thing going. Ideally, most people that were wealthy, by the way, that I interviewed in this book, $800 millionaires, 2 billionaires, a big chunk of them ran their own business. When I mean run their own business, they were either a lawyer running their own business or a doctor running or a fish and chip shop. Don't insult
the
it.
Portuguese out there.
Yeah, but don't insult it. You can make a lot of good money out of, especially, I mean, I think I've got shares in Mike's, the brilliant fish and chip shop down here in Somerset West.
Shout out to my grandfather.
Who makes the most awesome fish. I don't mind paying it. By the way, with your business, first, look after people's needs when you run a business. I'm trying to address a need. You know what my need in this book is? I can tell you in one line, one sentence. Understanding money is difficult for a lot of people, and finance and investing. It's difficult. Well, I'm trying to make it easy for you. I've tried to write a book that's easy to understand and easy to read. Yeah, okay, admittedly, I admit this because I'm the author. You're interviewing $800 millionaires. This is in South African language. These are people with approximately 20 million rand and above in US dollar millionaires. So I've interviewed, these are wealthy people. I've tried to chunk all of their thoughts into a 350 page book, okay? But obviously this 350 page book, you're not going to be able to read it in one day. I had my MBA, by the way. And when I started doing research on this book, I discovered that the only book on personal finance that I've read, that I'd half read, personal finance. Okay, this is my MBA from Wales University. Very good MBA. The only book that I'd sort of half read was Rich Dad, Poor Dad, which is a great book, by the way. And by the way, if you think gold isn't important, go and read what Robert, the author of that book, says about gold. He calls it God's something, okay? Yeah. He believes in gold. I mean, he knows a lot about investing in that guy. He sold millions of copies of his book. He will tell you, invest in gold and silver and buy it now, especially gold. He'll tell you. He calls it God's money, by the way. Okay. So this book's got like 20 books in one. You're not going to read it in one day. You might have to read it over 20 weekends. I've tried to write a timeless book that you're going to be able to give it to your children and grandchildren and even great-grandchildren, and it'll still make sense for them. This book's been very simply written. I've deliberately written it simply. Not to insult anyone, but not everyone is a financial planner. Not everyone is a financial guru. I've written this for the man in the street, the woman in the street. Anyone, I would say, probably above the age of 18. Very simple, easy to understand. Simple. Even the diagrams are so simple. By the way, I took all the diagrams in the book and I paid this consultant a crazy amount of money to simplify the diagrams. Do you know who the consultant was? My 13-year-old son. If my 13-year-old son,
Brilliant.
Jonathan, didn't understand the diagram, I went and reworked it. And I would even use my Gen Z daughter, Amy. I would show Amy the diagram like this. If Amy didn't instantly understand the diagram, if she didn't typical like you guys, you different generation, if she didn't instantly understand the diagram, then I went and reworked it to simplify it because I wanted Amy to catch it straight away. So I've deliberately trying to almost dumb it down, not to insult the readers or the viewers or anything, but to take the complexity out of it. I've explained assets simply, liabilities simply, investing in stocks simply, investing in properties simply, gold. I've demystified gold completely. There's no mystery to it. Even bonds. How do bonds work? You'll even understand how bonds work. Assets, liabilities, all these things. So some of the good books that I've read about probably, but now between 50 and 100 top bestsellers in personal finance and investing. One of the best ones that I read, in my opinion, the one I enjoyed the most, was a book by a gentleman called Harv T. Eker. It's called The Secrets of the Millionaire Mind. I think it's a simple, that's a book you can read on a plane trip from Johannesburg to Cape Town. It's a quick read, brilliant book, very simple. It's a wonderful book. I really encourage you to read it. It tells you how millionaires, by the way, think differently. It's secrets of the millionaires think differently about things. They've got a different, in this book I discuss, these millionaires have got a different way of looking at things. I discuss it in here. They think, by the way, do you know that millionaires even buying things? They buy long term. They buy a house that will last long term. They buy a car like a Toyota or Suzuki that will last long term. They're always buying assets that will last long term. They get married to people that will last long term. They think long term. They don't think short term. Poorer people, and I'm not being nasty, I'm not derogatory of the poor. God loves the poor. Okay, but less wealthy people tend to buy more shorter term for tomorrow, today, etc. But wealthy people tend to buy long term. They want the assets to last long term. Okay.
Awesome. Greg, thank you so much for being on the YouTube video. We took a lot from it. I took a lot from it. And if you got a lot of value from this interview, let me know down in the comments below. I will link Dr. Craig's LinkedIn and website in the description as well if you want to go follow up on that and where you can find his book in the near future. But thank you so much for joining today's interview. I hope to see you next time, and do us a favor, just drop the video a like and the algorithm will just shoot it out to the public. So have an amazing day.